Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market update for Tuesday, November 1st. The global stock market rout that began yesterday is picking up steam today. Investors are backing away from last week's enthusiasm about Europe's plan to tackle its sovereign debt crisis. That plan includes an agreement to recapitalize banks, boost the firepower of the Eurozone bailout fund, and write down 50% of Greek government debt. That agreement sparked a rally that helped the Dow Industrials achieve their third largest percentage gain in their history in October. But yesterday, investors began to question the details of the plan. And today, the uncertainty is growing after the Greek government called for a public referendum on its latest bailout plan.
Greece is responding to growing anger among citizens to the new austerity measures required for the country to get its next round of international aid. The surprise move to call a referendum may be a bid to win public support for the program, and the government clearly expects a positive response. But if the referendum fails, some analysts say that Greece will either have to restructure its debt much more aggressively than the 50% currently agreed upon, or even exit the Eurozone entirely. Following the news, European officials said they fully trust Greece to honor its commitments, but investors seem less than convinced. The benchmark ASE Composite Index in Athens is tumbling more than 7%.
Other global equity markets are also sharply lower, especially across Europe. Frankfurt's DAX index and the CAC 40 in Paris are both falling more than 5%. Meanwhile, the Chicago Board Options Exchange's Volatility Index, which measures fear in the marketplace, is soaring more than 20%. We're seeing that fear play out in other ways too. Investors are rushing into assets viewed as relatively safe, including U.S. Treasuries and the dollar. The yield on the benchmark 10-year note is falling back below 2%. And as the dollar climbs against other major currencies, commodity prices continue to fall. Gold is down about $40 an ounce, now trading well below the $1,700 mark. And crude oil is sliding back below $90 a barrel, a decline of nearly 4%.
The biggest decliners in the equity markets are financial stocks, including some of the largest U.S. banks. J.P. Morgan Chase and Bank of America are tumbling about 7% each, and Citigroup is plunging nearly 9%. We're also seeing losses from two big names posting earnings this morning, despite some relatively positive results. Pfizer said its third quarter net income more than quadrupled on a 7.5% increase in revenue. Both those numbers beat expectations, and Pfizer also raised its earnings outlook for the full year. Meanwhile, agricultural giant Archer Daniels Midland reported a 33% increase in quarterly profit, but adjusted earnings were not as strong as expected due to high corn costs and weak oilseed margins. Shares of ADM are off more than 4% in early trading. That's the latest from Weiss Research. Have a great trading day.